Hi, welcome to this edition of Market Chat. I hope you enjoyed last week's edition of Market Chat. Well, many of you must be wondering what is going on in the market today. We have US unemployment hitting as high as 14.9% with 33 million Americans out of job, and yet the Wall Street stock indices has been on the climb. So many of you are asking me what is happening and what is my perspective. Okay, so today I just want to share some of my insight of what I think going ahead we are likely to expect. All right, so just a little recap, all right? So last week I tried to put things in perspective and I ran through price action of what happened in 2008 for Dow Jones, for S&P, and for NASDAQ. Really, what I was really trying to say is that whatever we are seeing now, all right, is not something that is different, right? Whatever we're seeing now in 2008, all right, the same thing had happened. That was where I was there in the thick of action. I've been there before in 2008. And I remember when the market went down about 22%, it retraced 60%. And there was when a lot of people were scratching their head and, was wondering what is happening to the market. Why such a huge rebound? And many of the people who sold at the bottom became bullish, and they went into the market to buy, not knowing that the next leg was the real meltdown. All right, so this is the price action in 2008. All right, it's running through again, 22% down, 60% retracement, and then the real thing came. All right. And this is where we are now, all right? Dow Jones, we had 38% down, and we did a 62% retracement, and we are still there, all right? We're still there. We have, although recently the market has been quite strong, we are still there. So today, I'm just going to give you a perspective of, what I think is going to happen and what is the current price action in the market now and how we should be interpreting all this price action, all right? So, okay, let me just say, last week I said that what is happening now is nothing very new. We have a rebound that we saw in 2008, but that doesn't mean that after the rebound, the market is going straight to test the March low and crash. No, the market is not going to happen that way. What's really going to happen, I think, is that we have entered a new trading environment that is likely to unfold over the remaining of the second quarter, all right? So maybe a couple of months to go, 1-2 months maybe, all right? So what should investors be doing? What should traders be doing? You should be adopting a tactical strategy and trade the range rather than look for a major breakout. So every time when prices hits the resistance, like today we have a lot of stock market that hits right at the major resistance, and then a lot of people are turning bullish, hoping for a breakout. What I'm saying is that we should not hope for a breakout, but rather be buying at support and selling to resistance. All right, with price action heading towards the top end, it's risky to get in there, and the market could pull back. All right. So globally, we have a distinct trading range in the global market. All right, it's not only the Wall Street, in the Asian market also, we have a very distinct trading range outlined in Dow Jones, S&P, Hang Seng Index, STI, and the China A50. But the China A50, is stronger than the rest because it is trading on the upper boundary of its consolidation range. So that is why I'm a little bit more bullish in the Chinese market than all the rest of the Asia and the world. So the message is simple right here. All right. The message is, after a sharp sell down of the late March, all right, expect a rebound. And expect after the rebound, the market to hover around a trading range or consolidation range very volatile, expect volatility, and then after that, we will see whether the uptrend will resume or the market will roll over, test the March low, and perhaps go into another meltdown. All these really depend on how the COVID-19 pandemic turn out, all right? So when I'm looking at the global market price action, one thing that is missing, and that is market breadth, right? And that is why I'm not very convinced that this current uptrend can be sustained. So despite the massive gain, all right, of the late March low, the breadth reading remained extremely subdued. The weakness speaks to a significant damage done in February-March sell-off as a concentration in the rebound rally. Okay, so what it means is really, you know, after a big sell down, a lot of people are hurt and they're not convinced. They are not getting in the market in a big way. So how do we see that? Or as a comparison, it is worth noting that the percentage of stock above the respective 200-day moving average 32 session of the December 2008 saw the S&P 500 up 17% with 64% of stock trading above their respective 200-day moving average. But today, all right, the current gain of 28% off the March low only saw 24.8% of stocks above their 200-day moving average. So that is showing us the breadth. The breadth is not good enough, all right? The breadth is not good enough or to sustain a longer-term rally. All right, note that the breadth across the global market also remains subdued, with only Nasdaq's outperforming. All right, Nasdaq is showing 50% of its constituents trading above their respective 200-day moving average. All right, assuming the S&P does continue to oscillate in the trading range as we anticipate, bull will want to see the percentage of stock trading above 200-day moving average improve. Okay, so I was just talking about the global market going into a consolidated trading range, and I'm just going to show you, all right? So this is Hang Seng, right? Okay, so Hang Seng has been trading in this trading range 23468 to 24980, and in between these are the support and resistance that I drew here. And so this is really my trade plan. And every time it hits the high, I would be a seller. And every time it hits this very critical support, I would be a buyer. And that's how you should be trading the market. Tactical approach, all right? Selling into resistance, buying into support. How about STI? All right, STI the same, but looks a little bit weaker. All right, it's not testing the top. All right, but this is, if you're trading STI, you may want to wish to note these are the key support resistance levels, all right? Let the market trade within the range and just wait for a day when the market will break down and then you have a new trend coming, all right? So for Dow Jones, the same, although, you know, that's a couple of days, the market looks very strong, but then if you look at the big picture, it is still trading within the range, all right? S&P looks the same, all right? It looks the same, all right? It's trading between the range of 2760 to 2954. All right, and yesterday it hit very close to 2954, and that is why we would expect a correction to come in. Well, but Nasdaq is different, right? So Nasdaq has broken out of the range, and for some of you who have attended my previous series, you will know why Nasdaq has been outperforming the rest of the Wall Street indices like S&P and the Dow Jones. And the reason really is 45% of the constituent stock in Nasdaq is made up of the FANGs, which is the Facebook, the Amazon, Google, Apple, Netflix. All right, so it's easy to push Nasdaq higher than the S&P and the Dow Jones. And that's why you see the Nasdaq could be moving up so much easier than the rest. All right, but although Nasdaq has broken out of the range a little bit here, according to this chart, right, it's hit somewhat of a resistance, and we may be expecting also a pullback. All right. Okay, so what about Hang Seng? All right, Hang Seng similarly is trading on a consolidated range, okay, ranging between 23,468 to 24,650. Today it came very close to 24,650 again, which means that here Hang Seng could also be facing a resistance. So we have gone through all that, so many indices, and you probably noticed by now that the global indices are all the same, and they are all moving in a range, a consolidated pattern. And like I said, expect this range trading to last for a couple of months before we see a new trend forming, and that could be an uptrend or the market going down to test a much low and then perhaps even a meltdown. All right, so what's going on in the market today? All right, Wall Street continued to march higher even when we have 33 million job loss last week reported, and unemployment rate has gone up to 14.9%, and this is not seen since the Great Depression. So the stock market is like pricing in all the bad news in the COVID pandemic, and is really looking forward to recovery in the post-COVID era. But what has been quite interesting to me really is last week, I've been reading quite a lot of reports and articles about the world heading towards a debt inflation, like the one we saw in the Great Depression if the lockdown continues. So what is a debt deflation? Right? Debt deflation technically is mounting debts in an economy that has grown and grown so much bigger that the debt bubble will burst, and therefore the economy will be affected. And when the debt bubble bursts, the recession or the deflation will last a long time. All right, so that's the fear going into the market if this lockdown continues. But if this lockdown gets lifted and things goes quite smoothly, business goes back to normal, and we probably perhaps might skip a Great Depression. But so it really depends on the progress, all right, of the COVID-19, how it really goes from here. And later on, I will describe what I think about the current situation. And what is really worrying to me is the extraordinary QE policy introduced by the current Fed, which is the most aggressive Fed we have seen in history. All right, the Fed has printed unprecedented amount of money, and that led me to come to the conclusion that the existence of the dollar as a global reserve currency, really they are living on borrowed time. All right, so what has been causing the optimism since we hit the March low? And this is the chart that is causing the optimism, all right? Especially in the US, all right, we have seen the new cases of infection going down, particularly in New York State, all right? So you see in New York State, there's a dramatic drop, all right, in the number of cases going down, and that has led Donald Trump to propose reopening of the economy. So question is, should US go into reopen the economy? In fact, if you have been reading into some surveys, right, most Americans, 75% of Americans actually favors opening of the economy early rather than have a prolonged lockdown. Okay, so Donald Trump is pushing for a reopening of the economy. Will it work? All right, and for very obvious reason, the US president election is only about 6 months from here, and Donald has to open the economy early to improve his chance of winning. And you have been reading his popularity rating, Donald Trump, all right, popularity has dropped, all right, due to the way he has been handling the COVID pandemic, all right, and that is why, you know, he needs to do something very quickly to improve his chance of winning. But just look at the risk involved and whether this reopening of the economy in US will work. And the reason is quite simple, right? The reason some of these challenges, right, in the US system is like this. All right, US system is basically legalistic. All right, one issue will be the employer's concern about lawsuit if employee were to return to work and get sick. So if you force those guys, workers to come back and they get sick, they could sue the employer, and that could impede the process of reopening the economy. Okay, so another concern is that the incentive not to work created by coronavirus triggered increase in unemployment benefits well above what many Americans would expect to earn in the normal wages. For example, the average weekly unemployment benefits have increased from $387 a week to $987, and this is even more than what an average American earns. All right, so this increase in unemployment means, all right, to apply up to July. But question is, will the White House, all right, stop payment in view of the president election that will be 3 months away? So there is a chance that after this law and after the Americans enjoy a period of high unemployment benefits, they may not even want to return to the workforce. All right, so that is a challenge. And if you have seen lately, right, most Asian countries have controlled the COVID-19 pandemic quite well. Okay, if you look at Hong Kong has got almost zero case, and they are reopening their economy. China has done very, very well. In Asia countries like Vietnam has reported also very, very minimal cases. And what you could see here is the death rate, which is quite alarming, all right? It shows that in the West, right, the death rate per million of people is a lot more than what you will see in Asia. What is happening there, all right? Why is it that the West is managing COVID-19 so badly as compared to their Eastern counterpart, all right? For example, you will see that in Belgium, right, for every million people, you could have 722 people dying. In the US, 220 people per million. And back in our country, per million, we have 3.4 people dying, all right? And you could see so on and so forth. The Asian is really doing well. And that is one reason why it justifies for why Asian economy could open and not risk a lot, right? So the Western countries, when they reopen the economy, just basing on how they manage, right, the COVID-19, it is dangerous and it could cause a resurgence of a second wave of COVID, and that's the risk. And if that really happens, right, the economy will shut down again, and that will be a sure reason why the stock market will test the new low and even perhaps break the new low, and we could really go into a situation that we witnessed during the Great Depression. All right. And even Korea itself, right, managing it so well after they reopened just today, right? I saw this news, all right, that there was a guy that went clubbing from nightclubs to nightclubs and bars to bars, and it infected about 50 people, all right, and that resulted in the South Korean government shutting down 2,900 nightclubs and bars. All right, if this can happen to South Korea, all right, that also can happen to America and the rest of the European country, which is trying to open their economy. But China is doing really well today. You could see that their traffic, the air traffic, all right, has been increasing after they reopen, and that really looks promising. The auto market, people are coming back to the market to buy cars, and the traffic is growing. The auto dealers reporting good sales, all right. Residential properties are reporting good sales. We see markup volumes in the number of residential property sales done up, and that's really a good sign. It shows that the Chinese economy is taking off first, ahead of many other economies. All right, we could see the housing loans also starting to grow. All right, and above all, the unemployment rate in February is dropping from 6.2% to 5.9%, while the rest of the world, especially in US and Europe, the unemployment rate is growing. And that is the reason why, I am a little bit more bullish in the Chinese market than the rest of the world. Okay, but this is something, food for thought to you before, I call it a day for this session. All right, so this is something that interests me and also a thought that came to my mind. All right, there was an article I read that China, right, has approached a number of countries, all right, to discuss the possibility of easing border controls to allow some foreigners to come in. So China is already taking the step to open their economy to other foreign countries, which will improve international travel. So when I read this, right, the first thought that came to my mind is, if China were to open to other countries, the first country that they need to open to is Hong Kong and Macau. So as traders and investors, right, let me just encourage you, all right, to think about how to position yourself in case China open up their borders to Hong Kong and Macau. What should traders and investors do? We should position, because this is something that will be imminent. All right, so what should you buy? And hopefully they don't open their borders by this weekend, because next week I intend to talk about how should investor approach this theme. All right, so if you're interested, all right, to know more, please log in to my next week's market chat. And just before I go, all right, this will be the very important economy data coming out of US. All right, these are the key dates that you need to take note. And also, Chinese tech giants are going to report results. Tencent is going to report results on 13, JD.com on 15, and Alibaba on the 20th. And all this online experience stock, which was doing well in the COVID-19 pandemic, should report little better results. And that is why today you're seeing Tencent stocks, breaking the last 6 months high. All right, so look into these stocks. They are reporting results early, and that's all I have for you. All right, thanks for tuning in, and I hope to see you next week again for more market insights. And before I go, stay home, keep safe, stay healthy. All right, bye-bye.